Welcome to Research In and Out. Today we are going to cover the very basic topic of a stock market, which is very important to know. What is a stock market? What is a financial market? What different types of market and companies, different types of market segments. So let's have a look on what is financial market. So it is a market where people trade in financial securities and derivatives, which are like bonds, shares, precious metals. So what is this bonds, shares and precious metals? Shares are like any public company shares, just like Reliance company shares. Bonds means there are institutional who give loans to company and they have to pay them the interest. In the same way, government also issues bond to the public and the government pays interest to them like on quarterly basis, monthly basis, like that. Precious metal are like crude, not crude, but yeah, people do trade in crude, gold, silver, aluminium. People trades in these kind of metal as well. Now let's see what are the types of financial market. So there are only two types of market. First is primary market and the secondary market. So what is primary market and what is secondary market? So let's have a look at first at what is primary market. So it is a market where securities and shares are basically created for the very first time. Whenever any company wants to go to public, they have to come to primary market. They will issue IPO, which is initial public offering, where they create for the very first time the price of the shares. Recently, SBI cards has gone for IPO before this coronavirus got pandemic. So the prices were around 650. So they had fixed this price 640, let's say 640 to 650. People can buy at any price. Suppose that if I have to buy at 640, I have to pay a certain amount of. There are people who are buying at 650 as well. So the prices are fixed over there between this range. Once the company comes in IPO, once all the shares got subscribed, there's certain criteria as well to go in the secondary market. Once it's not like that every company whoever is coming in the IPO will go to the secondary market. If the company shares are not subscribed, the shares are not subscribed 90%, they will not go to the secondary market. So what is secondary market? Secondary market is nothing but share market, stock market, equity market, commodity market, whatever you want to give this name. So where people are trading on every working day, actually from 9 to 3:30 in equity market, and in commodity they can trade till 11:30. So what is secondary market? Secondary market where we, like any people or institutional investor, companies, they trade in that market. They buy shares, they sell shares, they buy and sell on the same day, they buy and keep it for a long term. It depends on them. So the secondary market is a market where people actually trade in shares, and there are different number of shares. As in there are different companies. So they're trading in all, let's say as there's some people trading in Reliance, some are trading in Tata Motors, some are in banking, any bank, ICICI, Axis Bank, Tata Steel, auto company, let's say Maruti Suzuki. There are n number of companies available. So where these companies are listed? So these companies in secondary market, the companies are listed in NSE and BSE. NSE is National Stock Exchange and BSE is Bombay Stock Exchange. Now that we know about financial market, let's know about what are the types of companies. So there are two types of companies: private company and public company. So private companies are those companies whose shares we can't trade. No, you need to have a lot of money, like in crores, to invest in these kind of company. So let's talk the recent thing. We all have heard that Reliance Jio got so much of investors, right? So Reliance Jio is a private company. These investors, when Facebook invested amount, they got 10% or 9% somewhere shares, right? So now that Facebook is having these kind of shares, but if we want to invest in Jio, we can't, because we need to have a lot of money to invest in private company. And what is a public company? Public companies are those companies whose shares we can trade easily, and we don't need to have crores of rupees. We just need to have 100 rupees or whichever you want to purchase any share, and the price is, like, let's say there are companies whose share price is 50 paise, 5 rupees, 50 rupees. Like, you need to have that amount of money, that's it. and you can purchase one share of that particular company. Now we all trade in public company shares only from 9:15 to 3:30. Actually the trading starts from 9:15 to 3:30. So we can trade in public company only which are listed in NSE and BSE stock exchanges. Now how are we going to trade? Let's find out what is the first stock market. So we have spoken everything about the financial market, which company are we going to trade. Now let's know what is the stock market. So it is a market where common people like normal public, institutional investors, foreign investors, they come and they buy and sell the shares. But earlier how it used to happen that we have to go to NSE and BSE particular place, and there will be some bidding happening, there will be demand, there will be supply, and accordingly if you're purchasing any shares at a particular price, you'll be getting proof that you have purchased this price whenever you want to go and sell it. So like that it used to happen. Now that everything is electronic form, so even we can buy and sell the shares in electronic form. So there are stockbrokers available in India who are registered with SEBI. SEBI, if you are hearing for the first time, it is a Securities Exchange Board of India. So SEBI actually regulates the stock market. They make sure that there is no illegal activities are happening, right? So there are stockbrokers available. You need to create an account with them so that you can trade in any market segment. If you want to buy any share of any company, you need to have a Demat account from these brokers. So the next topic is like how we can buy and sell the shares. As I told, you need to have a Demat account. So Demat account is like, there is a bank account, saving accounts where you go and put your money, right? So the Demat account is a place where you can buy your shares and keep it in your portfolio. So, and you can keep it as long as you want. That's how it works. You need to have a Demat account to trade, to buy and sell the shares. So these Zerodha, Alice Blue and other stocks, basically I use these three. Most of the time I use Zerodha because Zerodha is one of the best platform and they are quick. But now that Zerodha is because of coronavirus pandemic, Zerodha isn't giving good amount of leverage, so I have shifted to Alice Blue because of leverage in commodity segment. So you can, if you want to trade, you need to have an account with Zerodha if you want, or Alice Blue, or any of those. But I prefer if you will have a Zerodha account, it will be better. Now let's know about what is trading. So trading is nothing but buying and selling of shares, either for short term or like long term, whenever you want, till the time if you want to keep it up. If you are buying and selling on the same day, it is known as intraday, and if you are buying and selling whenever you want, that is called long term investment. So that's the next topic. So types of trading. So intraday, when happens, market opens at 9:15 and closes at 3:30. So in this kind of trade, what happens, you buy any share after 9:15 and you have to sell that shares before 3:20. No, you can't keep it at 3:30, by the way. Your stockbroker will automatically, if you are not selling that share, your stockbroker will sell that share whatever the price is there. Suppose that you purchase any price at 100 rupees at 9:20 and you are not selling, that is an intraday. But when the time is like 3:30 and you still have not sold the shares, the stockbroker will automatically sell those shares. Long-term trading. So long-term trading is like you buy the shares anytime now and you sell it whenever you want to sell off. That's how long-term trading works. And when you are placing an order in your particular stockbroker account, there are different kind of types of order. Which kind of order is an intraday, which kind of order is for long-term investment. So I will let you know which option you have to select for intraday and for long-term trading. So now let's go to market segments. So what is a market segments and what are the types of market segments? So we know that we would have heard that gold prices are increasing, crude oil prices are falling, Reliance prices are going up, USD is going up. So how does it happen, right? So there are 4 segments of market actually. So equity market are nothing but those public company Reliance, ICICI Bank, Axis Bank, Tata Motors, Maruti Suzuki, and all these banks comes into the equity market. So all those public companies are into the equity market. So we can trade in the equity market from 9:15 to 3:20, and for intraday, and for till 3:30 you can trade for long term investment. If you are buying any share, then you can keep it hold it till 3:30. If you are not selling off also, it is not a problem. Now commodity market. So commodity market are those market we trade in those thing which are having a physical presence. Crude oil, gold, grains, silvers, aluminiums, all these are physically present, right? So we trade in those market segments. Now we will talk about the derivative market, which is like the craziest thing because derivative market, the name is saying that it is derived from somewhere, right? So derivative market can be derived from the equity market, commodity market as well, and there are futures and options. So the futures and options you must have heard or not, I don't know, but these are the craziest thing. It can make you rich in a day, or it can make you a beggar in a day as well. It all depends on the strategy you have. You can't gamble over in futures and options. So I'll talk more about futures and options. So futures, let's say you want to buy Reliance shares at 2000. The current price is like 2000. You want 100 shares. So the prices will be 2000, 2 lakh rupees actually. So if you don't want to pay, futures are like these. Futures and options are like contract basis for 1 month, 2 months, 3 months, like that. So futures, for buying a Reliance futures, you just need to pay 20% of the amount, let's say. So you just have to pay 40,000 to buy 100 shares of Reliance. If the prices will go to 2,200, you will be in profit of 20,000. 2,000 is 200 rupees has increased, and you have 100 shares. So you will be in profit of 20,000. Okay. And if the prices has gone down, then 1800, then you will be in loss of 20,000 as well. That's how it works. So if you're very much sure when you're trading in futures, you should have a specific strategy to trade. And what are the options? So options are, there are very much a quick movement. Options are also same, like there are contract as well, for valid for a day, not valid for a day, valid for a month, like that. So futures and contract will have an expiry date, as in they will get expired on the last Thursday of every month. Okay, so suppose that Reliance is having an Reliance futures, they'll expire on the last Thursday of every month. And options, how do we trade in options? So let's say Reliance Reliance options. Okay, you want to buy Reliance share. Okay, so the prices are 2000, you're expecting it to 21,000. Sorry, 22,000, and the prices are you're expecting is to go 2,100. So you have to buy Reliance options to 2,100 or 2,050 rupees C. Okay, I'll talk, if you don't know any of these terms, I'll be talking details what are the futures and options with proper example. I'll show you in Zerodha platform like how this works. So don't worry about it. So if the prices will go up, you'll earn profit. So, and futures and options, basically I'll be talking in detail. I'll make you understand what are the things you have to take care about it. Just remember, if Reliance price is going up, the futures and options will also go up. There are two types of options actually: option buying and option selling. So if you want to buy any options, you have to put the Reliance CE, and if you want to sell Reliance PE. Don't worry about this. I'll be talking in detail what are the futures and options, how can you trade. I'll upload a video of that. So now the last segment of market is currency and forex. Like for forex market, you can say a currency market. So basically people also trade in these markets, and these markets are actually available 24 hours on all the working days, because there are people who get their account open with forex, which is like 24 hours, because if in USA, if you'll say the market is open till 2 a.m. and in India till 3:30 a.m. and then in other countries it like that happens. So people do trade in USD INR and Japanese INR, then USD Japan, depends on their choices. That's how it works. Now that you have know what are these market segments, right? So the next video will be talking about the types of candlesticks. You know what is the stock market, what is intraday, how can you trade in intraday, which kind of company you have to look upon. The next type of video I'll explain is candlesticks, because you need to know what is the candlesticks, how they work. You should know each and everything about candlestick, because that's the most important thing of the market to understand. But remember, candlestick is not everything, it's just a part of the game of market. If you have a strategy, candlestick doesn't matter. That's it. And just remember one thing I like to say: if anyone is saying you that the stock market is gambling, believe them or not, it's up to you. But it's a gambling when you are just trading based on your instinct. When you are getting that feeling the prices will go up, then you are gone. You can't trade. You can do prices will go up. All these things will work only for long-term investment. If you are trading in futures and options or intraday, as in the same buying and selling on the same day, your instinct will not work at all. You need to have proper strategy, a control on your greed. Then only you can be successful in these intraday, or else you are a failure. So intraday is a skill for those people who have a proper strategy, who have a proper control on their emotions. I'll see you in next video, types of candlesticks, where I'll be explaining you different types of candlesticks. Thank you.